Hey everybody, it's Brian Shannon from alphatrends.net. Today is April 14th. It's Saturday, and it's time to take a look at the markets this past week. We did have a strong performance. We left off with a pretty weak close last Friday, but little bit of a good bounce back here this week. The financials were actually higher, but they did stage a reversal yesterday off earnings. So let's take a look at the market here and try to make some sense of it. S&P 500 looking at a 15-minute time frame. Each candle represents 15 minutes. This is where we left off last week, and we sold off hard on Friday. And this week we saw a bounce. We are above a rising 5-day moving average, and we held the volume-weighted average price from last Friday's low. So on a closing basis each day. So we are holding above that, but it's not a clear picture. And we'll take a look first at a daily time frame here. We're still holding above that rising 50-day moving average, and we're still below the declining 50-day. I'm sorry, we're above the rising 200-day, that's the red one, and below the declining 50-day moving average. When we break it down to an intraday time frame showing from the beginning of the year, each one of these candles is 195 minutes. 2 candles equals 1 day. We have the volume weighted average price year to date. That's that purple line. The VWAP from this peak right here, you can see we closed pretty much right on it, and we're below the volume weighted average price from these lows and from this high. So we have this cluster of potential resistance from these recent peaks and highs this year. Below us, we are above the volume weighted average price from this low, and from the beginning of that move. So what we're going to be looking for this week is that we want to see about 262 hold. If this market is to break down below 262, it could be the beginning of another leg lower. And by that I mean it wouldn't happen immediately, but if it were to come down like that, maybe down towards 261, rally up, and then if these VWAPs were to find resistance, I think that could lead to the next leg lower. The potential for a bullish scenario, I don't think is as likely, but we still have to consider it. And that is that the market could gather some energy, get up above these VWAPs, hold for a little bit, and then maybe continue to move higher. Right now, it seems with a declining 50-day moving average that it's more likely for a continuation to the downside. But we have the beginning of earnings season, and that's going to make a big difference. Let's talk about earnings in the financials for a moment. Just looking at the financial index. Now, the XLF is below the declining 50-day moving average. That's the green one, and above the rising 200-day moving average. It's been doing a whole lot of nothing here, but we are below the year-to-date volume-weighted average price and below the volume-weighted average price off this peak, showing that there is money flowing out in negative sentiment over those time frames. Looking at the 195-minute time frame, I didn't do color them up all so pretty, but here we can see that the year-to-date VWAP off of these peaks and valleys are all overhead, and in fact on Friday we gapped up and found sellers in there. That's not a good scenario. This market the financials need to hold in this general area. They are, right at the volume weighted average price from the low this year. But it's concerning that when you get that news, and it looks like to a lot of people that they're breaking out, they're breaking a little level of resistance, it gaps up, and then from that failed move, we saw a fast move, and now we might see a vast move lower in these financials. What we would like to see is for them to jump back up into here and hold on, but it feels like we could have something more along the lines of this, and if that were to happen, I think it would spill over to the broader market. We do have this low from September. We're right on that volume weighted average price, so maybe we can just hold on and be neutral, but it doesn't look great when we consider where we are in the NASDAQ. Here again, we're below a declining 50-day moving average, above a rising 200. You have to consider where we've just come from. Well, in the last week and a half, we've run from 154 to 163. So a pretty big move, and it came right into a cluster of volume-weighted average prices from this year. The year-to-date VWAP, we couldn't get above that Friday. That was also the VWAP from the peak, and from these lows and these peaks. So it was the likely area for resistance to be found. And right now, so far, it is finding that here in this 195-minute time frame. If we drill down to a 30-minute time frame, here we can see that the volume weighted average price from the recent peak, we're back below that. We did hold, however, above the volume weighted average price from last week. So, the Nasdaq, if it can hold above this cluster down in here, 158 to 159, if we can continue to hold above that, I think this market still is in the healing process and could potentially move back higher. But we still have to have a lot of caution here, and it's going to be really up to the individual stocks. And I think you're better off this week, focusing on individual names. The biotechs continue to be really the worst group here. They are stuck below a 50 and a 200-day moving average. They're going to get what's known as a death cross here soon. That is the crossing of the 50 down through 200. Not typically an actionable thing, but it gets a lot of headlines. But the key point is we are still, showing a lot of weakness in there. On the somewhat positive side, we continue to hold above the volume weighted average price from the 2017. So I just don't see an edge in trading the biotech stocks right now. So I'd say, stay away from them really more than anything. Let's take a look at gold. Good. This is the weekly chart of gold. The energy continues to build in gold. It's still not breaking out, but if it can break beyond 1380, 1390, then I think you've got a quick move up towards 1600, 1650. As for Bitcoin, it did make a nice move above that volume weighted average price from this sell-off. It had shown support, and then I thought that was about what would limit this rally, but obviously we're up through it. I think the next if we can see this, if we can see it consolidate in this general area and hold above the volume weighted average price from that recent low, then I think the next upside objective would be up near this volume weighted average price, just under about 8,800. Anyways, the bigger trend is still clearly lower here. So, certainly don't chase these types of moves in Bitcoin. That's not going to help you at all. So back to the markets. It's going to be quite dependent this week upon what the earnings do, and we'll have to take it on a stock-by-stock basis. I do this analysis every single day for Alpha Trend subscribers, so if you're interested, take a look. Thanks for your time.